Afternoon, everybody. How are we doing? How is everybody? It's fine. What day is it? Tuesday afternoon. Losing track. It's only Tuesday. How are we doing? Ian, Peter, Crum, Mark, Virginia, Gregors, Wayne, Brian. Got my Mamba juice ready. Good man. Brian sent me a video. Apparently, Mamba FX is a fake. I didn't say it. Somebody else has said it. He's a scammer. All right. Signal services. What can you do? Afternoon, Julio, Fletch, Dion, Rajiv, Hamza. Right. So closed out a bit this morning. Aussie dollar, basically. Where's my pen gone? Ooh, that. Aussie dollar CAD. Aussie dollar US dollar. And Aussie dollar CAD, actually. I put it all the way down in the corner down there. This pen, every time you launch it, it goes to a different place on your screen. You have to hunt for it. When you've got a 49-inch monitor, you have to really hunt for it. So Aussie US closed that one out yesterday, closed this one out today, closed the other one out last week. So it's pushed down to ADR, basically. I think this Aussie dollar's probably got a little bit more weakness in it. And we've got US news coming this afternoon. So this morning we had the cash rate, obviously, and the Aussie dollar dropped. This afternoon, in 30 minutes after the open, we've got the PMIs. So I've exited Aussie CAD and Aussie US shorts just to bank that in case the US and Canadian dollar news is positive. So if, negative. So if we get negative figures from PMI, the Canadian dollar and the US dollar are going to go down, which means the Aussie is going to drive up against both of those. So if that news comes out as a positive, basically, if it comes out as a positive, trying to figure it out, for the US, this is coming down anyway. So I'm going to get out of the Aussie dollar CAD and get flat because I've banked 3 times on that already. And then I'll just take that one off with a tiny little profit here, just in case it double bottoms, because that's going to be 125 ADR. And the Aussie US. I've got the TPs set on these last 2 positions, just below that propulsion gap, which is going to be 200 ADR. So it's going to take a hell of a move to get down there today. But so that's those 2. The other 2, US dollar Swiss and Euro CAD, I haven't really got anywhere with at the moment. So US dollar Swiss, basically, if we get positive news, that will rally. I might take it off if we get to 150 ADR here in this propulsion gap. But don't know. We'll see. And Euro CAD, basically, I'm just sitting in. So ADRs we looked at this morning, vast majority of these are Australian. Obviously, the Aussie has a negative news, so it's dropped. Well, had an interest rate sustained, so that's dropped. Aussie dollar Swiss has come down. That's bouncing off of 125 at the moment. Aussie dollar yen. Yen's been very strong today. You can see all yen pairs have had a nice little rally. Starting to weaken a little bit now. But yeah, that's come down. So there's a few opportunities, but most of these you would have struggled to get into because the move was so fast. So we have had further pushes on them. So you would have had a reversal alert there for the euro odd, but it's pushed up, giving you another one just below 175 there. Pound odd has already hit 175. So there's some really big extensions, but these are against the fundamentals for the Australian dollar. So they will pull back, but it's just a case of when. That's just shy of 200, look. Very close. So there's a few of those available for mean reversion plays. There's a few RSIs which we'll look at in a minute. DAX this morning was a nice move up. We looked at this morning. I got out this morning. I really didn't like the price action today. So we pushed up into this high, which we haven't been able to get through. We gapped down today. We pushed up and then immediately rejected that level with quite a big buy order, which immediately got squashed. So basically, I got out this morning for a very tiny profit, just a little $100. It then came back down, retested the pre-market lows, bounced off the pre-market lows, cracked that high, sat there pretty much all morning in a nice symmetrical triangle, and it's just broken out to the upside. So this is rallying again. These are not stopping. These indices are just parabolic. Unbelievable move. And out the highs again. So your upside target on the DAX is 150 ADR today, which is up at that previous high up there. The US indices today so far haven't really gone anywhere. We had a gap fill on the Dow. The S&P is down, and so is the NASDAQ. Both of these have got upside gap fills. So we had down days yesterday on the S&P and the NAS. The Dow kind of closed just shy of where it opened. So little bit of respite on the US indices. Still look like they want a massive pullback. They're massively extended, but we're just not getting any sellers on board at the moment. It's hard to find upsides in these now. Look, Dow out the highs. S&P, we are just shy of the highs, and same for the NASDAQ. Oh, no, sorry, the NASDAQ just broke out the highs. Yeah, sorry, we had that little double top, didn't we? So, yeah, we broke out the highs, and we've kind of put in a double top. So it does look like it's starting a rollover, all of it, but it keeps going up. So we'll see where we go on those. We've got 40 seconds to the open, so we'll just watch the open. See how we get on this morning or this afternoon, wherever you are. Afternoon, everybody else. Fletch, Dion, Rajiv, I think I said that already. Hamza, Kenali. Can't remember who I said hello to. Big push going on, just pre-market, look. So the initial break is going to be taken on the 5-minute today. I would suspect. We'll have a look at what the ranges are when the candle closes, but that looks pretty good. No news this morning. No news at all. So we've got half an hour until PMIs and JOLTS. Okay. Pre-market range too big on the S&P and the Dow. NASDAQ is long. So we'll see where we go. See if there's a bit more volume coming in today. Okay, so pre-market high on the NASDAQ is basically the open today. So it's the tiny gap fill to the upside. Then we got the high of that rally out of New York yesterday, and then we'd be looking to come up to ADR basically for first resistance to the upside. Downside, looking at yesterday's low, which is very close. It's only 1.5 hour. So if we break yesterday's low, I think we might be starting that rollover, but we'll see. See where we go. If we break that low from yesterday, there's a long way to go to the downside. So at the moment, we're not going anywhere. Very slow. So while we're waiting for that to kick in, we'll have a look at the FX pairs. So yeah, I've gone through the ADRs basically very quickly. As you can see, these are all Aussie based. All of these. That one. That's New Zealand, and that's New Zealand, which are affected by the Australian dollar. So basically, the Aussie is what's caused everything to move today. That's the only movement we've had. The pound odd has hit its weekly range now. So it's obviously only Tuesday. So 2 days, we've done the entire week's range. Vast majority of it, as you can see, we've done 200 ADR today off the back of the Australian interest rate. So there is a good potential mean reversion on this one. Just putting back somewhere into that entire move for a new leg up. We've got a potential area of support to the downside there, which is kind of where that started today, that move. Sorry, where that move pulled back to today. So that might have already been actually tested. So upside resistance, really, you're looking at the monthly highs. We've got 2 monthly highs coming up. We've got a propulsion gap here out of this accumulation, which might act as a little bit of a resistance. But if you take your first entry on this one today, scaling in up into this area here for a second entry and then a pullback on that entire leg. So pound odd looks like a good little short. It's very range bound at the moment, as you can see. Yeah, we've been range bound basically for 2 whole months. So going all the way back to here, back to the end of September, which is where we started the range. So we're coming up into range highs. So good opportunity for shorts out of there. If this range high doesn't hold, you've got a very nice support resistance there, which is all the way up there. So you'd be scaling in basically up to there and then get out on that move. So that looks good, the pound odd. Like the look of that one. Very nicely extended today. Aussie dollar yen is also very extended. I'm not particularly keen on the yen at the moment. I don't know which way this thing's going. It looks to me like the yen's going to power up and everything's going to continue to drop on it. So this is kind of a counter trend play. We've got a very nice previous support, which did get tested as we broke through it, but it was kind of a wick up into it. So I think there's a good chance we might get a pullback on that leg and then continue to the downside. So this is a nice extension out of the hourly. If you're using the market reversal alerts EA, you would have got an entry on that one this morning in there. There was a 5-minute reversal alert. Your reversal alert was there this morning. Oh, no, it wasn't. Sorry, it was there. That candle. So that was your reversal alert long this morning. Then it invalidated that low straight away. Came back, double bottomed it, and we're down. So you'd be first entry long there. If you got into it with the EA. Okay, NASDAQ's rejected the highs so far. So taking the 5-minute opening range break short on the S&P. No trade yet on the Dow. So if we break long today, we'll get hedged on the S&P. Dow looking like it's a little bit weak at the open, but not really a lot of movement on that one yet. Afternoon, IT. Short on the Dow. Nearly. Now I am. Nice bit of slippage there. So short the Dow, short the S&P. So hoping for a drop on these today because that will hedge the NASDAQ and then I can exit these two with profit, close that one out using the profit on those. So hopefully we'll just get a nice flush to the downside. So Dow Jones downside today. Obviously we've got the pre-market low. Yesterday's low is just shy of just beyond 2R. So I'm just going to move my TP up ever so slightly above that low, just in case it double bottoms to the pip. S&P downside. Yesterday's low is again it's almost identical at S&P. So just moving that up just shy of the 2R target to the downside. NASDAQ's flying, look. Okay, the S&P is going to find it very hard to break short with the NASDAQ that strong. Okay, NASDAQ pre-market high is initial target, so the gap fill, really. So watch this area here when we get there, potentially for a hit to the downside. Real mixed bag today. Difficult. Afternoon XR update news. Someone else has the problem that the EA just starts sometimes. Is there a bug fix? I use MT4. No. EA just starts sometimes. No, not that I'm aware of. Dow's out the lows nicely now at the pre-market low. So just heading down to that, just shy of yesterday's low to our target. S&P trying to go short again. NASDAQ rejecting those highs again. Tempted to close that NASDAQ out, seeing as these are very weak today, the other two. Like to see one of those hit target first, though, before I do that. Okay, target hit on the Dow. I'm just getting ready to exit the NASDAQ. So Dow coming off the lows, yesterday's low, which is that previous resistance. So basically, that one's target banked. This one, I'm hedged, basically. These two indices move together, so pretty much hedge. On the two, not really going anywhere, is it? Bit difficult to make a decision on them at the minute. Let them play out. See if that Dow can get a runner on today. Right. While I'm waiting for those to do something and decide which way they're going, we'll have a look at the FX pairs. We'll have a look at the RSIs. So there's all your ADRs. RSIs, so a lot of these RSIs you're going to find are basically the same as the ADRs, because obviously when we get an ADR hit, we tend to get hourly RSI extensions as well. And then obviously if those continue, we get 4-hour RSI extensions. So Aussie dollar CAD is extended at the moment just about on that 4-hour. It's very, very, very close to getting me out of this. Just wondering if I should just dump this for $80. I'm going to keep hold of it until the news. We got news in 20 minutes, so I'm just going to wait and see what happens with the news. So yeah, Aussie dollar CAD. Might even be able to get half an ADR out of it, so I might move the TP down slightly. So that is extended to the downside, obviously. Better extensions at the 80-20 levels, but we're coming down into an area here which is potentially going to be supportive. So this area here, which we tapped into twice, pulled away, tried again, failed. Then we broke to the downside. We came up, hit it again, hit resistance at that level. Then we finally broke through it. So this whole area here is an area of balance and accumulation. And this is exactly where we are now. So there's a good chance that we're going to find some chop basically down here. It's going to move up and down for a bit. The news event obviously coming up is going to be US dollar driven. So either the US dollar is going to drive up or down. So if the US dollar drives up, this is going to hit target and I'm done. If it doesn't, then obviously going to get a bounce into that 2-week accumulation. So there's a number of areas there just above that propulsion gap. This propulsion gap here is obviously the break of that low. So this area here is your kind of balance. So upside, I wouldn't expect it really to do much more than that and then drop again. And if it just goes down, we're looking for a break of that low. Either way, it's going to be very extended and want to pull back from there. So it's okay as a long. But obviously, because we've just had Australian dollar freeze their interest rates, which is negative, and we could have US dollar good PMI figures coming out, it's probably not the best time to get into this one at the moment. But it's a very weak long. Aussie dollar Swiss, nicely extended down below the 25 level. We're at a lovely area of support on this at the moment. So we've got all these wicks down here in this area that we drove away from, which is a previous area that we'd butted into. Nice little support area there for a 4-hour RSI extension, and then potentially 15-minute reversal alert, which you're just about to get any second now. So that one's nicely extended. That's also extended on the hourly. The entry on that one didn't quite get it this morning because of the speed of that movement. We didn't get a reversal alert on it this morning. It was extended on the hourly, but we haven't actually had a 5-minute reversal alert. And now, if you look on the 5-minute chart, the reversal alert's just triggered, but the hourly RSI is no longer extended below the 25 level. So that's not an entry for the EA, but you want to take that one manually, you can do. Looking for a push up into that area there or back up into those lows. So it's got a good ADR to the upside to go. Aussie dollar yen, very extended. Again, these extended on the hourly. It's also extended on the 4-hourly. This is a massive drop, and I would expect a very nice pullback from this. At least a 38 retracement, if not higher. So that is your support that got broken. So we came down into that level, bounced, we hit it again, bounced, then we broke it. So that propulsion gap is what I would look to be tested again. That area at least, if not back up into that propulsion gap. So that's a nice looking long. You've got good support coming up down here as well, which is just beyond 200 ADR. So if this does continue to drop today and you get beyond 200 ADR, you've got that entire move, which we're going to pull back on. So really nice looking long on the Aussie dollar yen, extended on the hourly and the 4-hourly. So you can take 5-minute reversal alert, which you didn't quite get there. You could take a 15, either or, but lower time frame entry, nice entry there. Hasn't given you the reversal alert there. Look, it is forming potentially an uneven W though. So that is like a good long. However, it's kind of counter trend. I'd much rather be shorting everything against the yen, but you know, even stuff, if this is going to continue down for weeks or months, it's still got to pull back on the way. So you're trading the mean reversion. So it's not a problem going long on it. Just be a bit careful. Aussie New Zealand, extended on the 4-hour, not very extended. It's just back down below that 25 level. Good divergence there, making lower lows over and over again and making high lows on the RSI. So that is bullish. I would expect it really to come and retest this area again to the upside, or if it's not going to get all the way back up there, just at least a pullback on that move there. But Aussie New Zealand is not the best thing in the world to trade. It spends an awful lot of its time going nowhere. And then you get these big flushes where interest rates change or something changes in the economy of the Aussie or the New Zealand, and it goes out of whack because they're big trade partners, so they move together. Goes out of whack for a bit, and then it comes just back into stability. Goes out of whack for a bit, sits there stable for a while. So it's not the nicest pair in the world to trade, but it is extended. Aussie US is also extended. That one I'm already in, so I'm hoping that gets more extended with the news, which is coming up in 15 minutes. So there's your Aussie RSIs. Just have a quick look at what the indices are up to. S&P's totally stuck sideways. NASDAQ's butted into the weekly high. What level is that? That's previous 1 week low. That's the low from last week. It's just hit. A bit of an old level, that. See if we can get some continuation on that. S&P looks like it's going to hedge. They look like they want to go long to me. Dow's coming off yesterday's low at the moment. Lock a bit more profit in. Lock a bit more profit than that in, actually. Lock another 1R in on the Dow. So we've broken that pre-market low. So we've just tapped into that wick. So if this does push back up, I'm just going to get out of that one, take 3R on it, because this looks like it wants to go. And the fact that the DAX went this morning, I've just got a feeling this wants to go long. So might as well just bank the profit on the Dow, stick it in the bank, because that one is going to pay for that one. That one's profit, that one's profit. So it's going to be a profitable day overall. It's just whether or not we can get a decent run on the NASDAQ. If these two go, which it looks like they want to, I would expect that to go as well. So I'm just locking 1R in. Okay, out the Dow. Hedged on the S&P. Come on, Nas, let's have a little pop out the top. Now you've hedged me on the S&P. Why no daily RSIs? I just don't trade the daily time frame. You can trade the daily if you want. Still covered in the Bootcamp time frames. So you trade what you can trade. Markets are fractal, so you can trade any time frames you want to trade that you can trade. So convenient, wasn't it? Someone must have asked this question before. So if you are a work from home type person that can check the charts fairly regularly, you can trade daily RSIs and hourly reversal alerts. If you are working from home, you've got a lot more time on your hands, 4 hour or 15. Full time, I trade H1M5. But if you're doing this part time, you can only check the charts every morning before you go to work and every evening when you come back from work. Let me just get rid of this spammer. Bye-bye, spammer. Someone's selling some crappy indicator in the chat. So yeah, trade whatever time frames you want. There's nothing wrong with trading daily RSIs and hourly reversal alerts. It's just down to you. Whatever you can trade. Okay, NASDAQ's just trying to get out the pre-market highs. Come on, Nas, let's have a pop. Wouldn't exactly call that a pop. Four minutes left. Just watching this price action at the highs. Just getting ready to close it. S&P is rejecting the highs. I don't want to take a loss on this, basically. So I'll take 1.5R on it instead of 2R. Just to lock the profit in. Because I've got $500 hedged. I'm going to shut that. Got $500 locked in profit there. I've got 300 or 250 locked in there, 100 locked in there, and a $500 hedge. Okay, so I've got 1R trailer on it. So if we can get just above that high, if we can get up to target today, that's going to trail at 1 hour and lock another one in. So that will lock $750 guaranteed in if it breaks that 2 hour level. That one's banked 500. I banked 100 this morning. So overall, that banks 1350. And I got 550 hedged. So that's the day done. If we can get out that high, I just want to get that locking in at 1 hour. Ideally, I might do this manually actually, just so I don't have to babysit it. It's 325, let's call it. So just want to lock that 1 hour in. I just want to lock in enough profit. I'm not convinced this is getting out the pre-market highs at the minute. Normally when you break a high, which is a decent high, and obviously this is a gap fill as well from previous day, you get a pop, which is basically all the limit orders there just getting all run over. We haven't. What we're getting is basically every buyer getting sold into over and over and over and over again, which tells me there's a big order sitting there. There we go. Got it. Which we've just run over. So there you go. So that's to our target hit. So that will now trail basically at that level. So the only hedge is the S&P. So if we're going long today, 5R is just inside ADR today, which is just around about that low. So that low there and that low there is basically somewhere you're going to find upside resistance today. So it's kind of 4.5 to ADR, 4.5R to ADR. So that TP is pretty much spot on. So what I'll probably do is just move that TP down under that low. So just over 4R. If we can get up to there, I'll exit the long and then wait for a pullback to exit the short. Try and put those at the same level. If we're going to go short, it's a little bit more tricky. So 5R to the downside is going to be just shy of last week's low. So I'm just going to push the TPs up below last week's low to the downside. 2R is yesterday's low. So if this does fail at the upside, if it hits the pre-market highs, for example, and just bounces back out, we'll be looking at yesterday's low potentially to the downside, and that could cause us just to go into rotation for there, in which case then I just lock in the hedge. So either going to hit that level to the upside or hit that level to the downside and then get out on a reversal. But hopefully it will just run like a lunatic. We got 2 levels coming up here. What are they? They're old levels I've put on for some reason. Let's have a quick look at the NAS. Where did we get up to? We did all the Aussies, didn't we? I don't know what those levels are. 5882. That's previous support level, look. So it's somewhere around there. So it's this area here that we broke. We bounced, slammed through it, bounced. So that's what I've got marked on the other chart. It's an old level we've had previously, which we're just coming to retest. So it's a bit old. It's been invalidated sort of 2 or 3 times now, so it's probably not that relevant. You watch it bounce directly off of those. Right, so there you go. So trailing the NASDAQ long and hedged on the S&P, Dow out and flat. Right. So I'll just quickly do these other RSIs and I'll catch up on the chat. Euro Swiss, 4-hour RSI extension to the downside. This is coming beautifully off this support. Look, so this is the area that I identified previously as that support area. So we hit that, hit it again, slammed through it, broke through it again, hit it again, hit it again, hit it again, bounced, hit it there, bounced. We are holding it at the moment. And we've got that little area at 100 ADR today to the downside as a backup. So this looks like a good long, just purely because we have not pulled back on that move at all. Yeah. So big, strong rally with no profit take on it at all. However, this euro is getting run over because they have their CPI is coming down faster than expected. They've just confirmed they're going to reduce interest rates early next year, which is earlier than we expected. So the market's selling it off. So you might find it hard to get a bounce. So I got out of this one yesterday, but it is massively extended. It was extended as well on the 4 hour on the hourly here, which is where I initially got into it. So technically, it's a good long. Fundamentally, it's more of a short. So it's whether or not the market does have a little rest before it starts that new leg down. I've no doubt that it is going to drop. It's just a case of whether or not we get a bounce. And at the moment, it looks like it's struggling. Yeah, we're not really managing to get further to the downside, but we are not making any headway either, are we? So not the greatest extension in the world, this one. It's only just extended. Same for the euro pound. Not really getting anywhere at the moment. We've got Bailey speaking tomorrow for the pound. We've got no euro news at all this week. So it's literally, we've got construction PMIs and Bailey speaking tomorrow morning. So if we do get a rally on that pound, that euro pound's going to come down further. There's nothing to rally the euro at the moment. So this could just sit here and just accumulate and drop. Not a lot you can do about that. The extension was last week down there. So that would have been your first entry. So you'd probably be in 3 now. Long. Nice support here, though, coming up. So this propulsion gap, basically, which we tested previously, that's your 3-month low. So if we can collapse all the way down to that 3-month low, we're going to get a dead cat bounce off of that. Hopefully a nice big springy one. But so it might go from here. If not, if it does push down, it will go from there. So that's not a bad entry. And pound odd extended on the 4 hour and the hourly. This one's in a range at the moment. We looked at this. You're coming up into, this is 200 ADR today. God, look at that spread. Here's the news. Big spike to the upside. TP2 hit on the S&P. Why is that TP? Oh, that's my trailing stop's just been taken out, isn't it? Okay, so that's banked. So long S&P straight into that weekly level. Look, rejecting off that weekly. So there's your gap fill done to the upside. So that's negative news on the US. I can tell that from the way the market's just reacted to it. So those numbers just came out negative on jolts. PMIs slightly up. Yeah, negative reactions to the US. I wouldn't say that's particularly negative news. Market certainly doesn't like it. Okay, so big drop on the US dollar. Not what I wanted to see today, but never mind. Canadian dollar will probably find that is coming down also. Yeah, euro rallying against the Canadian dollar. So that's good. If I can get out of that euro CAD, it'd be nice. So yeah, potentially more upside on this today. 3R, this is these levels I looked at previously. So S&P today. Difficult. Might find that just becomes a whipsaw. That might be a bit close. I'm just going to move that back up again, just a little bit higher. We might find that we rally up to ADR today. Yesterday's high is quite far away, but the way this market's going at the moment, we've seen some massive days. What I don't want to do is get out too soon and find it difficult to exit. So I'll monitor that one. Out on the NASDAQ though. Wow, that NASDAQ's really flying. Yeah, so those old levels are invalid now. They've gone. So approaching ADR on the NAS. So we'll see where we go on that. We'll come back to that in a minute. And pound odd was the other one. I think we just looked at that. Maybe did we see that? Did we do it? I can't remember. I lost track because the news came out. Yeah, so we were looking at that, weren't we? So this is in a range at the moment. We looked at this one because it's 200 ADR. There's your range height out of that propulsion. So yeah, good looking short. Big, strong push up. You have had a reversal alert on this on the 5 minute today already, as you can see there. So that's your reversal. You didn't get one there. You would have had one there as well. So there was a reversal alert there this morning, and you've had that one up there, which are pretty much, I think, almost 3/4 of an ADR apart. So that's your entry. 59 pips. So just over half an ADR, basically, between those two reversal alerts today. So big, strong push. Obviously, you can see this is the Australian figures coming out. So it was hard to get into a mean reversion on this today. But a retest of that level is probably what you'll get. Just a bit of a whipsaw going in at the moment. Not a massive move. We'll see. We might get some more movement on that. When RSI H1, H4 is 30, but RSI monthly is 70, is there much more risk against situations where all RSIs are synchronic? Good word, synchronic. I've no idea. I don't look at the monthlies at all. Never have. Not of interest to me at all. Don't know. Test it. I'm not trading monthlies. I'm trading intraday. I'm trading on the 5 minute chart using hourly RSI extensions. What's going on monthly on the RSI has got nothing to do with the time frames I'm looking at. You'll never see me look at a monthly chart. I just don't. I might every now and again, once a month or so, look at a weekly chart. Other than that, you'll rarely see me look at daily. I'm not institutional level trading. I'm intraday. So it's too big. If you get in on a monthly RSI extension, you'll think about the H1 RSI extensions that we take. Yeah, some of these trades that I get in on the hourlies, I might be in them for weeks. If you do the equivalent on the monthly, you'll be in it for months. Yeah, so imagine getting into a position with 0.1% risk and getting out with a 0.5% reward 3 months later. That's the norm on that sort of time frame. You've got to be doing big risk, and it's just too slow. You can't make money trading those times. You will make money. It'll be a much safer way of making money, but you won't make much of it unless you're going in with big risks. But the markets are fractal, so the same things play out on all time frames. Yeah, hourly RSI extensions work. Yeah. 4 hourly RSI extensions work. Yeah, it's coming down now. Up there. Yeah, look at it on the daily. Daily RSI extensions. It's relative strength. This is why we use this indicator. This is why I love it, because everybody hates it. Nobody uses it. It's crap. There's videos on YouTube going, RSI, the worst indicator ever. How comes I make over 150% return using just this one thing? It's the best thing in the world, as far as I'm concerned. I don't care what anybody says. I can prove it. When that gets above that level, you short it and it comes down. When it gets above that level, you short it and it comes down. It just works. Do it on the weekly time frame. I haven't got the RSI in here, but go and look at the weekly RSI extensions. Works. monthly. It will work. I haven't got enough data, but I wouldn't try and look for them to line up. That's difficult because RSI extensions happen from the ground upwards. So when your 5-minute RSI gets extended, the 15 isn't quite extended. If the 5 pushes further, the 15 will get there. As the 5 and the 15 are getting extended, the hourly will start to move up, but then the 5 and the 15 will come down. So you need a second leg on the 5 and 15 to take the hourly higher, then a third, and then the hourly gets extended. Now the 4-hour RSI is on its way up. So you need the hourly to pull back and put a second leg in to get the 4-hour up. Yeah. So by the time you get that monthly RSI extension, you've missed the whole lot. Every leg of it. See what I mean? Because the market's a fractal and everything moves from low time frames up to high time frames. If you're on a high time frame, you've missed that movement. Yes, you're getting in on the mean reversion, and yes, you will get that mean reversion, but you're going to have to wait forever for that thing to come back down again. And if you wait for everything to line up, what you'll find is you'll have your monthly RSI extension, your daily RSI extension, but the weekly RSI extension will have just come out and you'll be going, oh no, it's not extended. Well, it was, you missed it because it's moving first. That drags the higher time frames down. So you can't get them all above or below at the same time. You can do it on the RSI. If you look at the RSI dashboard, you can change the RSI dashboard to have column 1 being a 5, column 2 being a 15, that a 30, that an hourly, that a 4 hourly, that a daily. You'll find it very hard to get all of them lined up and lit up at the same time because the market's moving up and down. So when one's going up, the other one's coming down and vice versa. It's got to be a hell of a parabolic move to get everything extended at once. Look at the DAX. You might find this has done it over the length of this movement. So we're extended there. So if you look at that period of time, there. So if you look at that and then look on the 15-minute time frame, that's when we're extended on the hourly. If you look on the 15, we're extended on the 15 multiple times while we're extended on the hourly. On the 5-minute chart, I haven't got the RSI on this. Yeah, on the 5-minute chart, you got extended multiple times. But look, that hourly was extended that hourly was extended. The 5 wasn't there, or there, or there, and the 15 wasn't either. So if you're looking for the 5, the 15, and the hourly to get extended at the same time, there's very few instances. And it will be not after the first push or something. You know, it just doesn't work. I've tried it. I've got an indicator on the marketplace. No one ever buys it. Because I never use it. I don't push it. I don't talk about it at all. It's called multi-time frame stochastics. And I started testing multi-time frame oscillator extensions to get multiple levels at the same time. It doesn't work. It does work, but the number of times you'll get an entry are so few and far between, it's just not worth it. And the problem with oscillators, as you will know if you've been trading with me for any period of time, they get embedded. So when you're embedded, you ain't getting out. So when they all get embedded at the same time, it means you're on a parabolic run. You're in as much trouble on that parabolic run if you've got it in on the 15, the 30, the hourly, the 4 hourly, or whatever time frame you used. It really doesn't make any difference. But go and test it and do what I just did. Wait for an RSI extension, mark it, then go down to the lower time frames and see what happened on the lower time frame RSIs. You'll find there's not that many times that they were above there to give you a signal at the same time. Pulling back on the S&P. Everything's pulling back. So we're looking for these propulsion moves to hold. So this is the news. So we're looking for the buyers to add into their positions out the news. Pre-market high, which is the open today, basically, is probably a good level for a buy as well, if we're going to go long. Glad I got out of that Dow. That was a good move today. I don't want to trade monthly timeframes, but only looking for low risk. Yeah, so go and look at how many times you get extended on the monthly, but more importantly, look at how long those extensions last on the monthly. You can't catch the right direction, basically, because you don't know what the direction is. If something gets extended on the month, if something gets extended, right? So look at this chart. This is a really good. I used to do this in the when I was doing the live training. I used to do this with people a lot. Yeah, I put a chart up. Yeah, and I'd hide what time frame it was, and I'd hide the period separators, and I'd hide the dates, and I'd say to people, "Tell me what time frame this is." Everybody would say, "Oh, it's a 5-minute chart. Oh, that's the hourly chart. Well, that's the 4-hourly chart. That looks like a weekly chart, right?" Everybody would say something different because that could be absolutely any chart. Any chart. Imagine getting into a monthly RSI extension short there. 1 month, 2 months, 3 months, 4 months, 5. You've nearly half a year. You haven't had a pullback. Markets are fractal. The same things happen on every time frame. The same types of price movement happen on every time frame. If you get into this on a 5-minute chart and it starts to pull back from here, you're out within a week and a half. If you do this on the monthly time frame, you're out at some point this year, maybe about 6 months later. If you get embedded on a monthly RSI, you're in it all year long. And just because it's got extended, and you'll hear me say this all the time, just because it's got extended on the RSI does not mean it's coming down. It means it's extended on the RSI. Price is pushing up. We are mean reversion traders. Mean reversion is higher risk because we are running against the crowd. We're waiting for market participants to show us their hand to the downside to get in with them. If they decide, as they have with the DAX, and will go out, not to come down. So here's a good example. Yeah. RSI got extended above the 70 level on about the 14th of November. We've had one down day since then. We're embedded. Yeah, this could stay embedded. If we get a Santa rally, this is going to stay embedded for another 2 weeks. But RSI is crap, but I use it to make bank. Yeah. But this is why I use the RSI. Yeah. If 95% of traders on the planet don't make money and none of them are using the RSI because they think it's crap, what should you use? Everybody that tells you something is crap, use it because they're not making money. Yeah, banks and institutions do not use indicators in any shape or form. They use price levels and fundamentals to move the market up and down. We don't know where the market is going, but we know that when this gets extended, it was likely to come back down. The problem is everybody that is not making money is making one fundamental mistake. They're placing an order in the market to lose the money if they're wrong. If you took that RSI extension and were wrong there, you lost money. If you took that RSI extension there and were wrong, you lost money. You probably got in a couple of times there and lost what? 4% of your account now? Then you got in again here and lost money. You might have had another crack at it now and lost money. So maybe you're minus 6% down. The difference between people that use the RSI who don't make money is they use a market order to lose the money. If you scaled in to that short there and waited and scaled in there, there, and there, and there, when this thing does its retracement, you get out with a profit. The RSI is the best thing since sliced bread. It's totally wrong. But it's not totally wrong because the market decided to go up. It's totally wrong because people are using orders to lose them money. Use a stochastic, use a CCI, use a MACD. I don't care. I've said it many times. I use the RSI because I like it because it measures relative strength. Use whatever indicator you want. A moving average crossover divergence indicator, the MACD. Best thing since sliced bread. Everybody in the planet goes, MACD's brilliant. Woohoo! No one makes any money with the MACD. Remove the stop loss and use a MACD and all of a sudden you'll be profitable. Nothing to do with the indicator. It's to do with whether or not that market comes up and down and how you wait and scale for that movement to happen, not to do with the indicator. So you can use any time frame and any indicator you like. Mean reversion is mean reversion. Use a Bollinger Band. Bollinger Bands are awesome if you don't use a stop loss with them. If you use a stop loss with them, they're crap. I've been doing this for 3.5 years live on YouTube, showing this P&L every week using the RSI. I have not made money. I've had the odd month where I haven't made money, but I'm returning 100 to 150% a year regularly using the crappiest indicator on the planet. Go on YouTube, RSI, and see how many people will tell you exactly why it's bad and watch them put that stop loss in there and lose that money every 5 minutes. They're not losing money because the RSI is bad. They're losing money because they're using a stop loss. Nuts. Crazy. Wayne, missed your comment. The ADR levels on the S&P do not appear correct on my platform. No, there is no setting for ADR. ADR is ADR. There is no setting. It measures literally the average daily range and puts a line at it. That is, so ADR today on my broker for the S&P, up is 45.81, down is 45.45. That is ADR. If your broker's got different data, you'll get different levels. But they'll be roughly, it'll be an average daily range away, depending on your broker data. So ADR is 29. From that high to that line is 29. From that low to that high is 29. If you're measuring from here, you're measuring wrong. RSI is the oldest. If it's not broke, don't fix it. Is it the oldest? I don't know. I don't know when RSI was invented. I don't even know who invented the RSI, to be honest. I found it because of Dean Malone. Oh, Wilder, yeah. There we go. Developed by Mr. Wilder. I found it because of Dean Malone and the TDI, Traders Dynamic Index, which is basically an RSI with a load of other crap complications added on top of it. 1952. Brian thinks 1952. Let's. Doesn't say. Yeah, I mean, initially it was developed as a divergence indicator, but it's developed for stocks. Going down a rabbit hole now, aren't we? You notice how everything says about they come out every year, isn't it? They come out with this, please donate us some money to Wikipedia. 1978. 1978 it was. James Wilder made it. But you notice how everything that talks about any indicator always talks about the mathematics behind what it's showing you, how it works, and what it's measuring you. It tells you what it's telling. There is nothing that ever says the RSI should be used in this way. High and low levels of 80 and 20 or 90 and 10 or 70 and 30. There isn't any that work. There isn't any that don't work. They're just an indication of something's got a bit further up there than it should have done. Same with the stochastic, same with the MACD, same with the CCI. Every oscillator is just going up and down with price. That's literally all its job is. And you can speed it up and slow it down by entering numbers into an input field. It's not going to tell you what's going to happen in the future at all, is it? William, where can I learn on how to use the RSI? Bootcamp. And if you tell me you've done the bootcamp, do it again. Right, yeah. Propulsion's holding. So this is a short on the US at the moment. We are just coming up into that resistance, though. So that's where I was initially going to get out in here, which is what we've tapped into. But after the speed of that move, it's rejecting. Look, this is probably going to hedge, drop back down again. But I think I'm probably just going to hold this hedge. So I'm just going to watch this area here. That short or that support there, and that one there. So that area just under ADR is where I'm going to get out the longs, and then I'll see how we get on. If we're looking very aggressive, I might re-hedge it, which will lock in a bit more loss. But for me, to be honest, today, I'm better off just locking that hedge in. Banked 1, 2, 1,300. So basically $800 a day. Other than that, could go anywhere. That's all I've got today, really. So watch these US dollar moves if they happen. At the moment, we're not going anywhere, as you can see. So we've just basically pushed up and pushed down. We're just kind of sitting in the middle at the minute. So there's not really any big moves coming off of this US. We're stuck. Basically, it's just a little push up and down. So a little bit of strength and weakness, but nothing particularly exciting, I wouldn't say there. So I don't think I'm going to get out of anything else today. Just going to wait and see what happens with those. But that's your news done for the day now. So we've got GDP for the Aussie tomorrow. Looking at what's happened with the interest rates and the forecast on GDP, we're probably not going to get anything positive out of that. So I'd probably look for a little bit more downside potentially on the Aussie tomorrow, but we'll see what happens with that number. We've got PMIs and Bailey speaking tomorrow, and then it's non-farm employment change and the Canadian rate. So tomorrow afternoon is where it all kicks off. The US Open tomorrow might be quite tricky because the market's not going to want to put any decent money into the US dollar or pull it out of the US dollar until they know what's happening with the Canadian interest rates. The Bank of Canada haven't given us any forward guidance as to whether they're increasing or decreasing at all. They're always very tight-lipped, the Canadians. So if you look at where we are with inflation, it's coming down incredibly quickly. We're nearly down below that 3% mark, doing pretty much the same as the US. And the US are talking about reducing interest rates early next year. So again, probably the same with the Canadians. So we're hoping we might get a little bit of forward guidance tomorrow. With the statement. So I get the feeling we might see a little bit of weakness on the Canadian tomorrow, which will obviously bring that US dollar down as well. So we'll see what happens. But that's your main news tomorrow. And obviously we've got the non-farm employment change, which will just usually whipsaw. But that will give us a guide as to what's happening with the unemployment rate on Friday, which is going to be the big one this week. So we'll see what happens there. So that's it really for today. This US ECB coming out. Rate cuts are not expected in the short term. You just told us you were going to do it early next year. That's less than 4 months away. No further rate hikes again. So again, still bearish. Euro. No other news today. Have you chosen a broker for the FTSE? No, not yet. I'm probably going to do all this new year. I'm not going to, there's no point in mucking about. It's something I'm going to do over the Christmas break, basically look for a broker and sort that out. There's no point in starting anything now. I'm going to wait until the new year and start trading the FTSE then. Any news about testing the Forex EA? I've got something I'm developing at the moment, which is a Forex hedging. I'm not developing it, I'm testing it, which is working pretty well. I'm just trying to figure out the best way to do it. It's a long-term strategy. I don't like hedging at all. Apart from on the stock indexes. Forex, I've never liked hedging at all. I've never really got on with it. I've tried it and not really got anywhere with it. So I'm looking at the maths at the moment and just looking at the mathematics of it. There's inherent problems with hedging which really screw hedging up when markets go into parabolic moves. So I'm just looking at ways of minimizing the losses on big strong moves when you're hedged. So I've got some testing. I've been doing some testing this morning actually on it. It looks good. Principle looks good. As you can see, it's really good when it's really good, but when it's not so good, it's quite flat. So what I'm doing is running the same test over multiple periods of time to verify that it's robust, which it is. But these periods here, for example, we need another currency to offset that hedge against. So I'm just looking at how best to do that. The problem with hedging is when you get hedged and you use some of the profit of that hedge to pay the short, in this case, if it was long, when the market pulls back, you need to re-hedge that position, obviously. The problem is, and this is where this happens, yeah, which is stagnation. The problem is when you get a trend like that, what you do is you get into a hedge, you get out of a hedge, you get back into a hedge, you get out of a hedge, you get back into a hedge, you get out of a hedge. The problem is that hedge that started at that distance is now that distance. You're using the profits of the longs to pay the hedge shorts off. So what's happening is, let's say you got in with 1 lot there or 10 lots there, for example. As it pushes up, you reduce that to 9 lots, 8 lots, 7 lots, 6 lots. So you're reducing your risk down and you're keeping the hedge amounts small. The problem is getting out of the hedge. That can take a long time for the market to return back to a mean reversion point that allows you an exit, and then you can start again. So when you get into hedges that last no more than a few days, and I'm doing all this testing on the 15-minute and hourly timeframes, it's all good. When you get into a hedge that widens, you have to come up with a way to get out of that widening hedge, because hedges, in theory, if something trended like the DAX at the moment, hedges can get so unbelievably wide. They take months to get to a point where you can get back out of them again. And that's what causes stagnation. So if you get stagnation, it's not a problem as long as you have something that isn't stagnating. So when something is trending, for example, Euro, US dollar, if that was trending at the moment, you need to find something that is uncorrelated with the US dollar and the euro that won't be trending, that you can use, that will be making profit while this one isn't making profit. So you've got to look at hedging as a portfolio approach. Otherwise, it's virtually impossible to extract regular income from it. That's what my testing is showing anyway. There's many ways to get out of hedges, but this one's just starting up again. Look, so you have this lovely run where you get lots of trades, it makes a nice profit, and then it gets stuck in a wide hedge, and then it gets out of that wide hedge. As you can see, the green line then comes back up, hits the blue one, and you're off again. So it works, but long term, I'm getting 1.89 profit factors. So return on drawdown factors are 2.5, 3. They're really good, really good return on drawdown and profit factors, but long time. So this is a 6-month test with very, very small risk, obviously, but it's a 6-month test. So it's got a lot of promise, and I've tried multiple approaches. They all do the same thing. They get stuck. Blackball do the FTSE, yeah. There's lots of brokers that do the FTSE. I will find one that I like the look of. Spread is the most important thing for me, and execution. The Bling EA with random edited signals. The Bling EA, yeah. Brian sent me a video about Mamba FX, and somebody's basically I haven't actually watched it all in full yet, but somebody's basically said it all looks like a scam, and he's changing his signals, and that's what a lot of the signal services do. They change the signal. There's many of them out there, you know, but Kimmel Trading did the video. Was it Kimmel? Was it? Yeah. I haven't watched it in full yet, but there's any signal service, even if a signal service is legit, you will find it very, very hard to make money out of a signal service. Even if you're copy trading a signal service, you will not get the same entries. Yeah, they just don't work. Most of them, obviously, they don't work because they don't know what the hell they're doing. They're trying to sell videos or get YouTube revenue. That's basically what their job is. Or they're selling you a course, basically. So they give you all the signals. When they get a good run on the signals, they sell you the course that generated those signals. And of course, then it all just collapses. Or they adjust the signals. It's all a scam. Everything's a scam. We know that. Helpy FX, we've looked at them many times. Our friends Helpy FX that spam the group, that haven't spammed it for such a long time. Now they'll be back next week. There's loads of them out there. But evening outro. Going to start trading the FTSE. I'm going to try trading the FTSE. I just would kind of like something to put alongside the DAX in the mornings. So this today is a really good example of the portfolio approach. Yeah, $500, $715 minus 543. Doesn't matter, does it? Because we've made money on that and that. So just leave that hedge and just close it out later, and we walk away with a profit. The problem with the DAX is it's win or loss. If I could trade the FTSE and the FTSE could scream up to 2R and the DAX was hedged, I'll shut the DAX hedge and take the 2R. So I'd like to use something with it. The thing that concerns me about the FTSE is the speed. It's very slow most of the time, but there are days where it just goes nuts, like everything does. So I'm just concerned about the FTSE. Every time I've only tried to trade it once for a week, and I just found it awful. But I haven't really done any back testing. So, but anyway, back testing is a load of rubbish, as we know. So, not thought about the French index. The France 40, if you look at the France 40, it's very much the same as the DAX, except it hasn't got the volume. The DAX is the largest one. And the France and the French 40, the France 40 and the DAX move very much the same. So there's not really any point in trading either. This has got much more liquidity in it, much bigger stock index. So Euro Stocks is futures, which is basically an amalgamation of the DAX and the FTSE, the DAX and the France 40 pretty much. They all move the same. But there's lots of indexes out there. But, you know, it's all about making money at the end of the day. And the problem with this is, it, like I say, it's a hit or a miss. It either hedges, which is a shame, or it breaks and you're like, fantastic. But if you had the FTSE sitting next to it, you've got twice as much chance of getting hedged or making a loss. But having two indices to trade instead of one gives you that opportunity some days to get a 2R win and a hedge, which makes a 1R win. So where sometimes we get hedged on the DAX, you'll be able to walk away with a 1R rather than having to manage it. It's all about ease of making money. Yeah. If I can make money like I did today on here by getting out of that because I didn't like the look of the price action, getting out of that because it went screaming, and that sits there hedged, I'm done. I'm done for the day. I haven't got to do any more today. With the DAX, if we get hedged in the morning, I can be there 2.5 hours later going, for God's sake, DAX, move. And I've got to watch it because I'm in it. And it's the only opportunity I have to make money. If you've got two opportunities, yes, it's twice the risk, but it's also possibly twice the reward or one extra reward that you can take to offset against a possible hedge on the DAX. So that's why I'm looking at it. But I just don't, I've tried to trade it in the past when I was scalping and I just didn't get on with it. It just was such a slug. The problem, I think, is it gives you too many price action signals and it gets you out too quick. You've got to get used to it. Every indices has its own personality. I just don't think I'm very in tune with it, really. But that will change, obviously, if I watch it every day. So, which is what I want to do. But I might start off demo trading it. Or I might start off trading it, but with like 0.25% risk or something. Have I ever thought about making a combination of the ORB and the SIH? Well, the SIH is the ORB. The SIH is the safe version of the ORB. The ORB is the more profitable version, depending on how you use it. Using ADR to find a good size range. Well, that's basically what the SIH does. You can input the ADR into the ORB EA and do it manually. But I haven't. The ORB is more of a tool. I don't know, really. The trouble is, there's a million combinations you can do with everything. Everything you do. So when I do all the back tests, yeah, I did 100 tests this morning on the that one that I've just shown you on the Aussie CAD, and the test results range from 2.83 return on drawdown down to 0.05 return on drawdown just by changing a couple of settings. I'm testing whether or not it's good to close out a bigger or smaller percentage of the opposite hedge when you get to a profit target. It doesn't matter. You know, there's always going to be a better way, but there's only a better way on the days it's better. The other days it's not as good. It's all about long-term edges. Is there a long-term edge there? And putting the edge on your side. And hedging's great. It looks great. Return on drawdown is good. Profitability will be good depending on, I mean, I'm not using any risk on this one at the moment, but on these tests. But there's always a problem. Every strategy has a problem. This is why there is no, and somebody said this to me on, they commented on one of the YouTube live rooms and said, have you not got any settings for your EA that are 100% profitable autopilot? And my reply was the same as I do in here. Think about what you're saying. If there was a product that existed that you could put on a chart and leave on autopilot to just extract money out of the market without you doing anything, everyone on the planet would use it. It doesn't exist. You are a trader. You have to trade. Every strategy that looks like it's good has an Achilles heel, and you have to find the Achilles heel, and your job is to deal with that problem. So hedging, 30 to 40% of the time, it does what it does today. It just goes profit, profit. The days it doesn't, this is the Achilles heel. Deal with that. Forget about that. Forget about that. Same with the market reverse alert EA. RSI extension to the downside. It takes a long on a market reverse alert. It goes up and it hits a target. Get out. Don't worry about those. You don't have to worry about those. Yeah. The Achilles heel of position trading are the ones that go reversal alert, accumulation, drop. Deal with those. Everything else is just dealt with. Don't have to worry about it. It's just going to make profit. And it's the same with all EAs that I've developed. They all work well 70, 80, 90% of the time. The 10% of the time they don't work, you have to find a way out of those trades. That's where you come in. So you can automate 90% or 80% or 70% of the crap that you have to do on a daily basis to extract money, but you've still got that little 30%. And that's where the variance is in the back testing. It doesn't matter which setting you use in that 30%, they're all going to have a problem. They're all going to make money. Which of the 30? I don't know. That one that day, that one that day, that one the next day. There isn't one that works every day. If there was, I wouldn't be here. I'd be on a beach. The recliner EA, sit back and relax. Perfect. God, I could make up some brilliant EAs. Brian is my marketing man, coming up with the names. AZ, I've got 4 long positions on the euro, multiple trades on each. Are we completely reliant on weakness in other currencies? I would say so with the euros. Look at the Australian dollar, yeah? So the euro we know is flat on its arse at the moment. The Aussie today has had a bad day. Yeah. So depending on what you're in on the euro, you need the Canadian dollar to have a bad day. You need the Swiss franc to have a bad day. You need the pound to have a bad day. There's no... obviously, there is things that can happen with the euro to rally it, but those rallies I think you'll find will be short term. We've got the SMB rates coming up, which will affect the euro next week. And we've got the euro rate next week as well. That's not going to change. And then we've got the ECB press conference next week as well. And then all the PMIs. So next week is Euro week. So you might find you've got a little bit of continued weakness or stagnation sideways on the euros until next week. All the news is about next week. We have to wait for the news. That's, you know, this is what this is all about. Sitting here waiting for the moves. We don't know when they're coming. You can get a CPI figure and it does that. You can get a CPI figure and it does that. You can get a CPI figure that does that. Doesn't matter what the number is. It will do that, that, or that. Our job is to wait in the positions for it to do the thing that we want it to do. We don't know when it's going to do it. It will. It always does. But it's a waiting game, which is why you've got to watch your exposure. Because if you're in the euro 6 times long, for example, and it goes down like it has on the CPI numbers, that's 6 times more than you would have done if you'd have had one position on. Which is where people go wrong with exposure. They trade 28 pairs, each of them with a stop loss. They go the wrong way on each of them one day, and that's 28% of their account gone. If you'd have done 1 euro, 1 pound, 1 US, and 1 Swissy, for example, you've only lost 4% of your account. Exposure is massively important. Or reduce your risk, obviously. But yeah, it might find strength. We don't know. Coming up to Christmas, anything can happen because liquidity is going to get light. So you might find you get 200 ADR move to the upside and then it comes back down again. If that's enough to get you out, job done. I think I'm going to open a Santa account, run the ORB on FX at the New York Open and see what happens. Try it. Try everything once. Just going to somebody get Telegram. I just found when testing the SIH, it was profitable and very stable, but every now and again it would have a mega loss. Yeah. So those days, outro, I've covered those in here before. I've got all the screenshots of them. What's over here? So you'll have all these days on the DAX where, you know, you'll have these big losses, and these big losses are caused, not so much this one. This isn't a big loss because this is using high risk, but you'll have those big loss days, which are trying to find one. There we go. These days, yeah. Something's caused this on the DAX. It's a fundamental. So you'll find usually there is a news day where this happens or something happens. These days, yeah, you've got to re-hedge them. Most of the time, and this is why this is what backtesting is all about. This is why I built this EA with this facility to take screenshots so that we can see what happens. Days like this wasn't taken because the range was too small. Some days when you have a small range like this, you could make 15R. If you'd have taken that break, no reason to get out of that at all day. That was your reason to get out. So maybe you'd have only made about 12R. That's a lot of money. But this is what I mean. This is an anomaly. This pre-market range was 14 points. Normally, anything less than 20 points gets hedged. We know that. It's tested. I've tested it. Occasionally, something lower than 20 points won't get hedged, and it will make you enough to pay your mortgage for 6 months. But how do you know? Yeah, you don't. So all you can do is the days where it screams, and that's why I've moved my TP further away today, because I'm looking at that move and going, that could go big. So I've moved my TP further away. The further away it gets, the more likely you are to get a pullback. It's mean reversion. It's the same strategy as we trade everywhere. If that goes like that, you could re-hedge it. Now, there's settings I could put in the EA to automatically re-hedge, but then you would have another setting to add into the confusion of which settings to use. So do it manually. Yeah. Rely on the fact that we know that most of the time, if we get to 5R, it will mean revert from there. Some days there's a catastrophic news event where they increase the interest rates they weren't planning to, and something's going to go mental. Those days you hedge it and you take twice as much loss as normal. S&P today. I'm sitting here going, at the moment, I'm safe. This is about to hit target. Look. Yep. It's very close to ADR. What do we know about ADR? When the price meets its average daily range, often 58% of the time, it will go, I can't get any further than that, and it will start a pullback. We know that statistically. I've measured it. So that's safe. But if this now hits that TP and does that, and then puts a whacking great candle in like that and sits like this, I will re-hedge that. Me. Because I'm thinking, this ain't looking good. It could do that, but if it does that and goes to 300% of ADR, I'm not going to take the 25 grand loss. I'm re-hedging it and I'm going to take a loss on the day, but it's not going to be 25 grand. And that's what backtesting can show you. There isn't a setting that makes money and takes into account the days where the market moves 300% of its average daily range, because it only does that 1% of the year. But that 1% of the year is enough to wipe away all the profits. How do you deal with it? There isn't a way. If there was a way, I'd be sitting on a beach drinking a Mai Tai. There isn't. You've got to do it. You're a trader. You have to trade. Automation tools will automate 80% of your life. 20% of your life, you're going to need to deal with stuff. Just the way it is. And I know it frustrates the hell out of people. But I'm always going to say the same thing. If there is such a product out there, go and find it for me. I'll give you £1 million for it. I've been looking for 15 years. I haven't found it. And I'm happy pay £1 million for something that will mean that I can take the rest of my life off of work and just sit on a beach and make money. If you can't find it, and I haven't found it in 15 years, chances are it doesn't exist. Because there's nobody on YouTube selling it. There's nobody on any marketplace I've ever found selling it. And there's no trader on the planet I've ever found that has used full automation to make money. So you've got to have you watching stuff. I'm watching this, and I will be watching this because I'm in a trade. If this hadn't got hedged today and this had hit TP, I would be gone. But today I'm in a trade. Some days I'm not in a trade. I'm out in 30 minutes. This is the job. Nothing you can do. Hopefully there is a Mai Tai one out there, and AI is going to invent it for us. But think about it. If AI invented the EA that could trade on autopilot and just make money, who's taking the other side of the trade? Because if something can make money constantly, it means that someone's got to be losing money constantly. So therefore, not everybody can use it, can they? Otherwise, the market wouldn't work. Because for every person that buys, there has to be a seller. One of them has to win and one has to lose. So there's got to be a flaw in every trading strategy for every trading strategy to work. You don't realize that until you've gone through 100,000 trading strategies and realize none of them work. There's always a problem with them. You just got to find out what the problem is and minimize those problems. And in doing that, you will find more problems. It's a job like any other. There's problems all the time. There's no job in the world where you walk into the office and go, hey, I've got a job that there's never, ever going to be a problem with. Always one somewhere. Even if you work at McDonald's, at one point, you're going to make that burger and you're going to drop it on the floor and go, got to make it again. That's a problem. Someone is going to moan at you because their burger's late. That's a problem. Your manager's going to complain because your burger is going out later than everybody else's. That's a problem. Doesn't matter how many times you make a burger, you're going to slip up at some point. That's a good analogy. I'm using that one again. Right, approaching 5R on the S&P. So I'm relying on finding some sellers, well, somewhere around here. And again, you know, what if this hits this propulsion gap and suddenly comes all the way back down to here? You should have taken it there, you idiot. It's obvious now. It's not obvious now, is it? When it's down there in an hour's time, I'll be going, that was obvious. 50-50 shot. Everything you do in this job. 50-50. It's either coming down from there or it's not. If I get out now, I've got the danger of going into more drawdown. If I don't get out now, I've got the danger of not getting out now. Which is it? One or the other, isn't it? If only we knew. Outro, is that where you gave back all your gains? Where you give back all your gains, yeah. But this is what you're going to see. And this is what backtesting is about, yeah? This is why I'm doing this backtesting now, right? So the way I use backtesting is not to find the set file that makes me a fortune. Backtesting is to find, where's this not work? I don't need to worry about that. I don't need to worry about that. So why is that doing that? When I see an equity curve like this, I'm going, right, it's profitable. Brilliant. Why is it doing that? So then I watch in visual mode to see what's going on, and I can go, oh, right, it's struggling to get out of that hedge. Let's think of a mechanism to help that strategy along so that maybe we can reduce that down to maybe that. Still going to be there. You're not going to be able to stop that trend happening. That trend's happening. You ain't got a choice. You're not in control of that trend. That trend is making the market go up. You can't do anything about it. But there might be a way to get out of it a bit quicker. So I will look at ways to get rid of that problem. If this P&L changes then from that to that, to that, to that, to that, I know I've solved that problem. So then we look at that problem. Yeah. How can we stop these losses, stop these stagnations happening? Because we've got something that works 70, 80% of the time. Is there anything we can do about that? If I put something in that fixes that problem and turns it into that, but then at some point it does that, I go, right, why did it do that? Oh, because I implemented that. So we know we can't fix that problem. So what we end up with is something that looks like that. That's a normal profit curve in trading. You cannot avoid that. Just is there. And this is what everybody's looking for. Where's the P&L that goes like that? There isn't one. Everyone you see is just a lie. It doesn't exist. Somebody put in the Telegram group, somebody put a P&L in there from the ORB EA, I think it was. And it's a perfect profit curve, just went up. And I looked at it and I was like, I've had profit curves like that. And I can guarantee he's using a very, very, very small TP or a very, very, very small trailing stop. That much spread will immediately eliminate all that profit because it just doesn't work in the real world. We've seen in here, the ORB EA, the stock index Hedge EA, yeah, getting slipped. Look at that. I got slipped today on this order. Was it that one or another one? I got slipped on the Dow, wasn't it, today? You're not going to get exactly the same entry. So I asked for an entry there. the market gave me an entry there. The difference between that on something using a 5 pip stop is basically a profit curve that used to look like that, looking like that. One extra pip of spread will turn something that looks like that into something that looks like that. Backtesting can't give you all that information. I'm just watching this now while I'm waffling. Rejecting this propulsion gap. So this is where this sell order started. There. So we accumulated and then that broke. That's that propulsion move. So this might be the get out spot today. I'm doing what you're doing, where I'm using 0.1 risk. So the EA got me into €7. Yeah, that's fine. If you're using smaller risk and getting into more positions, it's not as much of a problem at all. So yeah, if you're reducing risk, getting into multiple pairs, it's just a lot more work to manage. You're going to manage more positions. You've got to keep your eye on the ball more. Yeah, if you're in €7 or €6 long, for example, you've got to keep your eye regularly on 6 pairs, because if you're in all these euros and suddenly the yen has a move, the euro yen will spike, but the rest of the yens won't. So you need to be aware of that euro yen so that you can deal with that euro yen. It just means you've got more to monitor, more to manage. That P&L will be a hell of a lot longer than if you're just using the 2 currency rule as from the bootcamp. But the risk is very, very, very much the same. The drawdown will be very much the same. The profitability should be slightly higher, because those ones where you get in and out in one trade or 2 trades that you would have missed because you were already exposed on the euro, those are the ones you get as extra bunts. So I think it's actually better to trade every pair with smaller risk than it is to use the 2 currency rule, which is what I always used to do. I've been doing it for over a year now. And virtually no impact on results. So more profitable and easier, really, because it's less drawdown, which is good. If you automatically hedge every trade and take the profit of the winning trade, then auto re-hedge, and it just keeps taking profits from the winners, is that profitable strategy? No. Because you, as I've said with this, let's say you entered a hedge there. So you went, let's say you went short there and hedged there. You didn't get out of your short because the market moved up. So you went long, and then you got to a point where you took the profit off of that long and waited. You're waiting for the market to come back down so you can get out of that. You had to re-hedge there. Let's say you got out there. Massive profit. So you've made a massive profit and a massive profit. You're stuck in a hedge from there and a hedge from there. Now you need the market to come back down to get you out of that hedge and that hedge. What it does, we're broken up. So now you're in long, and let's say you get out now at that double top, and we want the market to come down. So you've now got 3 short hedges on. This one is in that much of drawdown. So what your hedge actually is it's that loss, that loss, that loss. The accumulation of those 3 together is your negative. It's going to be smaller than the positive because the positive is only that much, but the drawdown is so huge. So what you should be doing is every time you get out of a long position, you should be taking some off of the short. The problem is you've moved so far away. Yes, you can reduce that down and still make a profit by, like, if you bank that one and only close 30% of that one and leave 70% of it intact, you're going to have a positive P&L. But you're going to have a massive negative drawdown. When it pushes like this, you'll find that you are still in a hedge. Short there, long there. You've got to rely on this thing now. This is taking a month. Even if this thing takes 3 weeks and it just gets back to there, all you're going to do is take a break even on that. So what you've got to do is work work multiple hedges at once, which becomes infinitely more complex. And this is where hedging, I have always found in the past, becomes very, very, very difficult. It's a very complicated thing to do. TP hit, I'm out of the S&P longs. So sell stop in place, ready to get short. So this is where it becomes dangerous, because all the time now this pushes against me, this drawdown is going to go up and up and up and up. So there will be a point where I'll have to go, this is not stopping, and I'll need to put a hedge on. Invariably what happens is when you get to that point, you go, I'll put the hedge on there, and then it goes, vroom, and you're like, crap. So you can get out a bit of that short and then try and get out of that long. But if it continues to come down, all you've done is you've taken profit too quickly on the short, and now you're in drawdown on the hedge. So you have to re-hedge short. When do you get out of that one? Invariably, at the point it pulls back, and now you're stuck in the opposite direction again. And this is what I found personally in the past when I was trying to hedge with position trading. All that happened was every time I got hedged again, it was exactly the point where I shouldn't have got hedged. And it's one of those things where you call it at a point like ADR today. If this goes beyond ADR, where do I hedge this today? Where do I re-hedge? If this thing goes parabolic, where do I stop that drawdown going up? There's a point where you have to push the button. Because it's gone so far, it's usually at the point where it's ready for a pullback. So all you're doing is you're locking in more loss as it comes back down. It's not an easy thing to do, hedging. There's people make it look easy. People come up with maths algorithms that make it look easy. Execution is very difficult, because as a person, I'm watching this level going, that is where I think price is going to turn from. I will find it very hard to go long now again and re-hedge this, because this looks like an area. I would like to re-hedge there, but by the time it gets up to there, I'm going to be in a hell of a lot more drawdown. Yeah. So you have to use your brain with hedging. I've built models which will try and do all sorts of hedging exit mechanisms, but none of them will ever get the right level all the time. And again, it comes down to that thing. Yes, I can get it right 70% of the time by picking support and resistance. But what do you do with the 30%? Someone's got to intervene. That's your job. So waiting for basically this to trigger. So basically when this triggers, this sell stop, which will obviously get dragged up, I will get into a short. That is the point then I will look at re-hedging. So I will lock in whatever that will be from wherever that entry is on that sell stop to the high of the day. And I will hope that that is the peak formation high, and it gives me enough exit to get out with $598 profit in this case, which is the loss recovery target. DAX still pushing? Yep. Yeah, DAX is still going crazy. So that level on the DAX we've just exceeded is that high, which was next resistance. Not interested at all. Straight through it. Look. Screamed through it when the chart updates. But yeah, we're approaching 175 ADR on the DAX. Above 150. Yeah. Where's it going to stop? That was resistance. Next resistance is all the way up there, which is that's not even all the way up there. That's another chart. That line. So that's it. DAX, we're all-time highs. Where do you stop? Look at this move. Unbelievable. Unbelievable. Parabolic. Which is what worries me about this S&P. This may not stop either. So we're ADR now. We're 150 ADR on the DAX. We're approaching 125 ADR on the NASDAQ. If this is a pullback on that leg, we're in big trouble, aren't we? See where it goes. So that pending will move up to there. If this closes bullish, this is ADR. So see if we can get an exit. Anyone else notice the massive spikes at midnight on the S&P when testing, or is that my broker data? That's probably your broker data. %80 of IG clients are short, quite possibly. Oh, I haven't got indices on here. I haven't got indices there, but yeah, they will be. And all the time they're short, market will keep going. 2014 outro. Could have made some money on that. Odd. Okay, starting to stall out now on the potentially on the S&P. Got 1.5 minutes on this candle, so I'll be looking to get a short aggressive entry on, and then once that aggressive entry is on, I'll monitor. So at the moment, DD is 437. So you can see how quick that drops. So if this gets down to here, I can exit this with a break even today, and that banks all of that as profit. But my target is to make money. Obviously, 598 is the aggressive exit, which would need a decent pullback on this. So I'll watch this and see where we go, but hopefully we can get a decent profitable exit on this one today. Right, I'll leave it there. I'll be back tomorrow morning, 7:50 for the Frankfurt session as usual. Back tomorrow afternoon for US, and then we'll see where we go from there. Nothing particularly exciting FX today. Not a lot of movement, and you've got GDP to worry about tomorrow again for the Aussie. So everything else we'll look at tomorrow morning news-wise and prepare for the rest of the news tomorrow. Bank of Canada interest rate, big one. So another big news day tomorrow. So we should see some decent movement, which means we'll probably have a crappy, quiet morning, but we'll see. All right, so have a good day. Anything else you need, let me know. I'll be in Telegram. Other than that, I'll be back tomorrow morning and tomorrow afternoon, same times as usual, and I will see you then. Have a good day.